Good morning to you all and welcome to London Session Trading. So this session, we're going to focus on the Shareef strategy. I'm going to walk you guys through a few trades. My goal during this session is to enter as many trades as we can. I'm going to try to teach through it as well, but please make sure you're trading in demo. This is just for learning purposes. I want to make sure that we can talk through some good setups and go over risk management and walk you through the proper steps when you start trading. So we're going to go over risk management. We're going to go over entering your take profit and your stop loss correctly. And also I'm going to show you how to implement a risk-free trade so that you can minimize your losses as much as possible. So with the Shareef strategy, what we're doing is we're basically using the IML web analyzer, and we are focusing only on the 15-minute time frame. We're using the Bollinger Bands. Our format is at 20 and close. We're using the Relative Strength Index, which is the RSI, and your format is at 7 and close. Actually, I think Shareef uses 14 and close, but I actually use 7 and close, so you can change it here on format if you want, but this works really, really well for me. And then the stochastic, I have mine on a faster speed at 5, 3, and 3. And you can change those numbers here. So if you have selected the Shareef strategy in IML Web Analyzer, your numbers may look just slightly different from mine. It still works the same. I just like my stochastic a little bit faster. And I also changed the RSI setting, which I believe is different, but it's pretty much similar, okay? So this is actually a really good setup right here. But we would just kind of wait. What I normally do is we had a buy called on EuroCAD, and what I normally do is I first look to the higher time frame. I always look at the 4-hour time frame just to get an idea of how the market is trending, and I usually just grab a trend line and I will just go from the previous swing low, and I will just see how the market's been trending. So overall, it's been an uptrend, and you can see that that trend is now breaking down. And how you know that it's breaking down is because notice here you have a higher high, followed by a higher low, a higher high, followed by a low, and then it continues to go higher, low, high, and then low. And when your next high is not higher than this previous swing high. So you see that it starts to break down here. And so that kind of gives us an idea of kind of where price is headed. So then I work my way down. I usually draw my support and resistance lines on the higher time frame. So you don't really have to rush to get in because usually you're going to have some pullback. So I just like to really look at what is price doing, where has it, been previously within the past couple of hours, within the past couple of days, within the past couple of weeks. I look to see if there's any areas where it's possibly going to try and retest. So if you see here on the 1-hour time frame, price came up to about 1.5260 just about an hour ago. And the last time that it tested this area, if you notice, I drew a zone here, and the last time it tested this area was on September 11th of 2018, okay? So that kind of gives you an idea when you draw these zones, that kind of gives you an idea to kind of know where is price possibly going to try to retest, where are these areas that price is respecting, and it gives you an idea of your entry and your exit points, and you can kind of watch and see what price is doing. So then I work my way down to the 15-minute time frame, and as you can see, it looks very different on the 15-minute time frame. And now I just I determine my entry from here. So with the Shareef setup, you're looking for example, for a buy, you want your sell candle to close right here outside of the band, which it did. You want your RSI to come down to preferably below the 20 level or right at the 20 level, start to point up. And then you want your stochastic to come down right below the 20 level, cross up over your red signal line. So this is a strong confirmation for me. I would definitely enter this trade. So what we want to do, while I want to get you guys in this trade, what we want to do first is we want to always know our risk management before we actually go into a trade. So one of the things that can help you guys with risk management is you can use a position size calculator. If you go to myfxbook.com I really like this position size calculator, especially if you're not sure or you're not very strong yet with risk management and you have some questions about it. IML Academy goes over this in great detail, but knowing what your risk is before you enter a trade is so important. And I usually lay this out in my trading plan. So how this works, for example, is if you have, I'm gonna give you guys an example in the chat really quickly. So I typed this out for you already. So let me copy and paste this really quickly too. And that way you'll have an example that you can jot down in your notes if you want. And then I'll go over it on the position size calculator. So for example, I'm gonna type this out right here. Let's say if we had an account balance of $500, and typically you want to risk no more than 1 to 3% of your total account balance. And you'll hear some people refer to twin trading when they are using the Shareef strategy, or if you've seen other people use some of the other strategies in IML. All you're doing with twin trading is you're taking one trade and you're breaking it into multiple trades based on your risk management plan, okay? And I'll tell you the strategy of that. So if we had a $500 account balance and we wanted to risk 1.5%, let's say we just want to do 1.5%, we want to do a 20 pip stop loss, or let's just even say, yeah, let's keep it at 1.5%. And we want to do a 20 pip stop loss. Let's say our pair is GBP USD. All you would do is calculate it, and this gives you your risk. So based on a $500 account, in order to risk 1.5% of your total account balance, you should not be risking more than $7.50 per trade, and your lot size should be 30 cents. So if we were to go get into a GBP USD pair right now, or it could be really any pair, you would want to use a 30-cent lot size. You would be risking a total of 20 pips, and your risk should be $7.50. So how do you calculate that in terms of, because you might be saying, okay, well, I know I use a 0.03 lot size, but what's going to be my entry price? Well, when we're scalping, most times you're going to get into the trade by entering a buy market or a sell market execution, okay? So let's walk through an example and find a trade to get into, and I will show you how we're going to do this. But what I want you to do right now is I want you to take the total of your account size for your demo account. So most of them start out at 3,000. So if you're around this mark, fine. But if not, just follow this calculation. So 3,000, I'm going to use a $3,000 demo, and I'm going to do a 1.5% risk. I'm going to do a 20 pip stop loss. I'm just going to leave it on GBP USD. It doesn't really matter which currency pair. And then I'm going to calculate it. So my risk is going to be $45, and the lot size that it's suggesting that I use is $2. So what I could do if I want a twin trade, I could enter 2 positions at $1 lot size. So if I enter the trade twice, my lot size would be $1 for each position, not $2 for not a $2 lot size for each position. Does that make sense? You guys can type in the chat if this makes sense, or if you have questions, but this is how the position size calculator works. And then I'll go over the other example in chat as well shortly. So that's a little bit on risk management, okay? And I like this because this is something that I didn't have nailed down when I first started scalping, and it wasn't a good feeling. I had losses, and they were bad losses. They weren't good losses. When you can trade, you know, going in ahead of time where you know your entry price, your take profit, your stop loss, you feel better about your trade. You know that you traded responsibly and you stuck to your plan. So as you can see, we're having some pullback here, and that's okay. What's going to happen is when you have a confirmation like this, you're going to have some pullback, and this is why I don't rush into the trade. So I like to kind of wait and see what happens, because I showed you that that trend was breaking down, right? So let's go back to the 1 hour time frame, and you can just kind of see. So what I normally do is I just look to see if it's going to break this support area here that I've mapped out. And then I kind of wait sometimes because it's gonna pull back. But I also like to use this moving average here on the Bollinger Band. This is a moving average that's with the Bollinger Band. And so as you can see, many times price will, well, let's see here. Let me find an example. You can kind of use it as basically it's used as a support and resistance line, but I look to see if it's gonna break. So now it's crossed the moving average, and now I'm just looking to see, is it going to drop below my support area that I've mapped out? And the good thing about the Shareef strategy is once you have a confirmation, you definitely can enter, but you want to have patience. So as you can see, price continued to drop. So some people have asked me before, I've noticed people have said, I got into the trade, I had a perfect setup, and it continued to drop, like price continued to go short. And that's the thing about, as a newbie, I think that trading this type of strategy and using these indicators are great. But over time, as you perfect your trading, you're going to be able to enhance your outcomes by looking at pure price action. But this has helped me out a lot. But if you notice, like I trade USD JPY, that's the only currency pair that I trade. And I'm strictly just using price action, just looking at what price is doing and using technical analysis to be able to determine, my entries and my exits. Now, I've only been able to do that because of my growth with IML. So those are things that will probably change your trading in the future. But for now, I want to show you a way that you can, make a consistent, reasonable profit in the market just by using a strategy like this, because it does work. So what you'll notice, like I said here, is you're definitely going to have some pullback and the market is going to pull back a bit. But usually when you have a strong confirmation like this, it will definitely go your way most times, unless you're up against a strong trend. And then you just have to be patient. So normally what I would do, because this is a confirmation for me, I would get in on the pullback if I'm not up against a very strong trend. And I know that I could get a good 3 to 5 pips. Sometimes I'll go for 10, and I'll show you how I determine that as well. So I'm going to show you something else as well too, how you can feel confident about your setups when you're getting in for the Shareef strategy is you look for, I call it tops and bottoms. So for example, if we're using the RSI, we want to enter, let me go over this really quickly. So before we actually trade, you always want to make sure that you look at forexfactory.com. So we want to make sure that we look at red folders and see what high impact news is ahead of us. So right now it's Tuesday around, what time is it? 12:42 a.m. PST. So at 12:15 we had a red folder for Euro, and we had a tentative for JPY. And if you notice, I'm going to show you all the JPY pairs went crazy. So let's look at AUD JPY, for example, and you can see what high impact news can potentially do to a trade. And so, so this was a sell. They called a sell on AUD JPY. I'll just show you USD JPY. If I could find what happened. Let me get rid of this real quick. Well, as you can see, I'll just show you here. So price hadn't broke this resistance area, and actually Swipe Trade just called a trade a few hours ago for USD JPY. And our entry price was at around, I think it was 111 point, I don't know if it was 9.8. It was somewhere up in here in this zone though. I know that. And then our stop loss was up here at 1112.20, I believe. Well, this is honestly a kind of predictable area. So what happened is buyers came in and pushed the price all the way here to 1112.282. And of course, all the JPY pairs followed. So that is the result of what high impact news could potentially do to your trade. It did something that we didn't expect, and so then it corrected it. Now it's correcting itself, and you'll see then. So I actually like to, when I look for these moves, and I'm going to give you a tip that when you're watching pairs that have high impact news, you can catch these very, I will say, moves, these big moves in the market. And so, for example, I got into this trade for swipe trades. It did hit the stop loss, but I got in a different account that I had, and I was able to catch the high up here and write it down to this support area here. So that's just an observation I wanted to go over with you. But Forex Factory, Euro is the only red folder that we have. So if you have a red high impact folder, you just want to avoid trading that pair 1 hour before the news and 1 hour after, okay? So it's 12:45 our time. So now we have our risk management laid out, okay? So you should have taken your account balance, and you can go to My FX Book, just plug in your total account balance of your demo right now. You put how much you want to risk between 1 to 3%. Your stop loss is 20 pips, and you calculate that. And so if you do a twin trade, or if you just want to do one trade, then you know that you could do a $2 lot size, you would do a 20 pip risk, and that total amount will be $45. You're risking 45, okay? And your take profit, usually you want to make whatever you're risking. So if you're going to if you're going to risk 20 pips, ideally you want to make 20 pips. With trading, with scalping, sometimes depending on your system and the strategy that you're using, for example, with the Shareef strategy, you'll see that a lot of people will aim for 3 to 5 pips. But there are instances where you can actually gain more than that, where you can gain 10 to 20 pips. But the goal is to be able to scalp and get in and get out very quickly. And if you wanted to take multiple trades, or if you want to trade the pullback, you can do that. But if you have a high percentage of wins, so let's say if majority of your trades, you're winning 94% of the time, that's good. You just want to have a really good reward to ratio, or your reward ratio of, win losses, so that in the event that when you're scalping, you're not like, let's say if you're only going for 3 pips, but you're risking 20, and when you have a loss, it wipes out all of your profit. So you don't want to do that. So that's why you have to demo, and find, you have to find what you're comfortable with. But I'm just going to share with you guys how I do it. There's a few things that I do that you would have to probably work on to understand in terms of how to go for extra pips and things like that. But here's a good setup I want to point out to you. So notice here where my cursor is, the red, so price closed right here outside of the band, your RSI, and this is what I mean by finding tops and bottoms. So if you scroll back previously in time and you look at the requirements of the Shareef strategy, you're looking for your RSI for your RSI line to come below 20. If you notice, every time it comes below the 20 level, or it's above the 80 level, and your stochastic follows with it, you have a very strong trade. So had you entered this trade right here, let me go ahead and drop a vertical line here. So this would have been your entry. Let me point this out. So this would have been your entry here. So again, price closed outside of the band. So if we were going for a buy, this is what we will want. Price closes outside of the band. And for your RSI, your signal line comes down below the 20 level, points up. Everything needs to be pointing up, okay? And then look at your stochastic line, how it comes down below the 20 and points up, and it needs to cross over your red signal line. So what happens, guys, is when you're this 80-20 level on the RSI, you want to trade when you're doing a buy, for example. You want to take trades that are on 20 to 0 on the RSI, and you want to wait until the bullish candle starts to form before you place your buy, okay? And you want your stochastic below 20 and to cross up. And what happened when that happened? Price went long. Look what happened. Let me draw it out for you. So you just have to get comfortable with what to look for. So see this? This is exactly what happened. Okay. And let's say that now, remember, you just want to get in and get out. But if you wanted to, you could have entered here. You could always scalp pullbacks if you want to when you become really good at scalping pullbacks. Well, let's just measure and see that if you would have got in about, let's say right here, how many pips would that have been? Let's say if we just even went to about right here, that's 50 pips. Even if you went to about this level here, you could have gotten 45 pips, okay? So a lot of times what I like to do, I like to focus on one currency pair. You can trade all these different pairs that you see when the web analyzer calls a buy or a sell, but if you focus on one currency pair, look what happens. Normally, what's going to happen, and I like to trade with the trend. A lot of the trades that the analyzer calls is going to be against the trend, but here's the beautiful thing. Look at this. Look how price went long, right? And if you follow this pair and you know what this pair is doing, AUD USD, and you become comfortable with how it moves, well, look here, you have another setup. So you could have rolled this to the top, and then you have a setup here, and now you ride it going down. Okay, so you just look for these different setups, and if you notice, that's all price is doing, right? And it's moving in patterns. And so you're able to catch those different patterns just by focusing on that one currency pair. And normally what I do, so if I were to get into this trade, let me just remove these lines. If I had gotten into this trade, I'm going to give you an example really quickly of how to make this a risk-free trade. Now you're going to have pullback, and you can't, when your trade is confirmed, do not be afraid of pullback, okay? And this is why I said you want to know your risk, because if you know your risk going into the trade, then you'll feel better about your trade because you're comfortable with what you're risking. So if I had got into this trade at, let's see, I'm going to do a horizontal line here. So let's say if we had entered right about here at 71.48, so 0.7148, that's our entry, right? Where would we drop our stop loss? So normally what I do, guys, is I look at the higher time frame and I look for the previous swing low. So notice, so what we do is we say, okay, if we're going to enter here, where was our last swing low? And we just kind of look left. And basically what you could do is draw another line if you want. So we say if price were to reverse against us, where could it possibly go? Where might it try and retest, okay? And so I put my point right here at 0.7132, all right? And so that is what, about a 10, 11, 12, 14 pip stop loss. So normally what I find from journaling this strategy, guys, to be honest, a 20 pip stop loss is sufficient. If you have a very tight stop loss, like I've done a 10 pip stop loss for a 10 pip gain, but the truth is that your trade needs room to breathe. So like I said, if you keep your lot size low and reasonable, and if you once you get really good at knowing what to look for and you're really strong at entering the trade, you can do very well with this strategy. And so what I try to do is I keep my risk very low. So if you trade a very high lot size, it's going to be easy to wipe out your account if you have a loss. So that's why you want to keep your lot size, reasonably low enough and have responsible risk management. But that's where you would drop your stop loss. Now, this is what I do. So when we enter the trade, let's say on the 15-minute chart, once I'm in the trade, if we got in at 0.7148, right about when we get to, so you could do a 3 to 5 pip take profit. You could put 2 positions and do maybe a 5 pip take profit on one and put your stop loss for both of them, but leave one of your positions open. And if this is the only pair you're trading, you can watch it, okay? So what I normally do is when I enter the trade, as I'm watching price, go long, what I do is I adjust my stop loss, and let's say if price goes right here. So I'm just watching what price is doing. So let's draw another horizontal line right here. So let's say price comes like about let's say even to 58. So now we have a 10 pip difference, right? So we got 10 pips. We see that price is continuing to go long. And then another good indicator, because you might be thinking, well, how do I know if price is going to reverse at any time? Well, as you can see here, you had a nice, this is another thing too. Once your RSI level, once your RSI goes at the about the 50 level, your strength is now, that shows that your strength is now with the buyers. And so that gives you kind of an indication as well too as the direction of the market. If it comes below and it's like down here near the 20 level, then that's a sign that the strength is with the sellers. So below 50, strength is with the sellers. Above 50, strength is with the buyers. And then as long as everything is pointing up and headed in the direction you want it to go, you can hold that position open and you can close it when you want. But what you can do is if you think that price is going to go long for maybe 20 pips, right? How you make this a risk-free trade is we're going to now change our stop loss from what we had from down here. We're going to modify it, and we're going to put our stop loss at least 1 or 2 pips past our entry. You want to leave enough room for the trade to breathe if it pulls back. But what I do is if I entered at 0.7148, I would do just a 1 pip difference. I would move my stop loss past my entry, and my stop loss would be 0.7149, okay? And so that makes your trade risk-free because now you don't have to worry about a possible loss, because if price reverses and goes against you, it's going to get you out of the trade, and you can determine if there's a better setup for you to re-enter. Otherwise, as you continue to move up in profit, so now let's say we're in the trade and our profit continues to increase. Notice you have a little pullback here. That's okay, because we moved our stop loss 1 pip past the entry, right? But let's say 5 pips or so, it continues to move up. All you do is you go back, you modify your stop loss, and now we're gonna move up our stop loss to about, let's say we move up our stop loss to about here, 5 pips past our entry. So as you're watching the trade and it continues to go up and up and up and up and up, I might get to a point where I say, okay, I'm $20 in profit. I'm gonna go ahead and cash out and I'm good with that. All right, so that's how I am able to do a risk-free trade and minimize my losses when I'm scalping, is that once I get to a profit level, usually of about, I would say at least 8 pips, I move it 1 pip past my entry. And I know that if price continues to go my way, then it should go in my favor. And then you can decide where you want to take profit. So that's how you can lock in more profit besides just aiming for the 3 to 5 pips. Type in the chat if that makes sense, or if you guys have questions, I'd be happy to answer. If it doesn't make sense, let me know. If you're totally confused, it's okay. If you're watching the playback of this video, you can comment on the video as well. I'd be happy to answer. Other than that, let's go ahead and see if we can take a few trades. So if I see a good setup, what I'm gonna tell you to do is just hit buy market or sell market execution. I'm gonna give you the stop loss, and I'm also going to give you the take profit level that we're going to aim for, okay? So this is AUD USD, and let me see if you guys have any questions. And I'm going to show you setups that you don't want to take. Awesome, glad that this makes sense to you guys. Okay, so notice here that the web analyzer called a buy on AUD USD, and this is currently where price is. So when they called it, we could always go back and look. I don't really do all of that. I don't really like draw lines and everything to see where price is called. I'm always worried about what is price doing right now. So I know that if 23 minutes ago, right here, because you could look at time past, and it tells you 23 minutes ago, Web Analyzer called a buy. However, in the last 23 minutes, price was nowhere near the bottom of this band. So that's not a confirmation for me. So as soon as I see that, I don't even consider this trade at all. I move on to the next one. So that's how you determine not to take the trade. If it doesn't line up with your confirmations, you do not take the trade at all. And now we know our JPY pairs had some high impact news, and they called a buy on USD JPY. So this is not a setup as well either. As you can see, price is going short right now. USD it's now coming down a lot. This is actually the one I was talking to you about a little while ago. So that's not one we would want to take. So now what you can do, you don't have to always wait on the web analyzer. You can actually scroll through and see what some of the pairs are doing. And I like to do that. If I know that USD JPY is going short right now, I know that some of the cross pairs or the pairs that it's similar to are we're gonna have the same movement. And so sometimes I click on my watch list and I go through some of these pairs here. So this is GBP USD. So look at this, GBP USD. So then I like to go on the 1 hour time frame, and I just like to get an idea of how the market is trending. And so overall, let's see. So this is an uptrend, okay? And what I like to do is just take my trend line, and I just like to draw out my trend line. And how you know if you're in a trend is you need at least 2 touches. So we want to drop that about right there and right there. You see how price is respecting this trend line? All right. And once price breaks this trend line, that's when we know that the trend is ending. So they called a, what is it, GBP USD? Web Analyzer actually called, I think, did they call it? Oh, they called a buy. Yay. So 15 minutes. So we work our way down. Oh, another thing that I do, let me just do this real quick. So I'm going to get rid of this. So we know that overall it's in an uptrend. And what I like to do is I grab a horizontal line and I draw my support and resistance. And I always plot my support and resistance off of the wicks, not the body of the candle, which IML Academy teaches. And then I drop it here. Okay. And now I say, great. Now I work my way down to the 15-minute time frame, and look at that. Look how beautiful that is. This is exactly what you want. So go ahead and grab your MetaTrader 4, and we're going to wait for a pullback, and we'll enter on GBP USD. So this, I like to catch the movement pretty quickly, but it always pulls back. So don't worry at all. So pull up your MetaTrader 4. And what you're going to do is you're going to open your MetaTrader 4, and when I tell you to, you're going to hit buy market execution twice. Hopefully we don't miss this one. I don't like to get in too late, but as you can see, this is a really nice movement. I'd like for it to pull back just a little bit. See, if I've missed too much of it, I don't enter at that point, because I like to make sure that I'm getting at least 3 to 5 pips if I'm going to enter a trade like this. So I just like to get in early on the movement. And I know that the market always pulls back, so I just wait for that moment. So you could do that as well too. So I'm gonna get my MetaTrader 4 ready. You guys can do the same. And I'll just tell you when. So let's see here. As you can see, our RSI didn't quite come down all the way to the 20 level. But let's see, 42. I want to get in at least right around 3140. So you could either do a pending order and put 3140. It's almost there. Or you can go ahead and you can hit buy market execution. I'm going to wait because I think it will pull back a little bit more. What is this? GBP USD trade. All right, I'm going to make sure I have my proper lot size based on what I planned out in my FX book. Okay, so my lot size, I'm going to break this into 2 trades, and I'm going to use a dollar lot size. So it's actually climbing a bit. I'm going to wait for it to pull back. Hopefully it pulls back. I just like to wait. I'm just very patient. Sometimes I will look at this and I'm like, oh man, I missed it. And then like 5 minutes later, it pulls back to like five pips. So I don't freak out. Sometimes I do miss it, and that's okay. But this is good because whether if we get into the trade or not, at least you know what to look for. And that's really my goal with this session, is to teach you guys proper risk management, what to look for, how to find these setups in your favor. So here's your confirmation. I'm just going to map it out for you. Oh, let me move this over. Okay, so that's your confirmation right there. And let me just kind of go over this. I'm gonna go really, really slow so that you guys know what to look for. So GBP USD web analyzer called a buy. So let's, here's our confirmation number one. Price closed outside of the band. So you would want your red sell candle to close outside of the band, okay? So your last 1 to 2 candles, you want to be your sell candle if you're going for a buy. And look exactly what happened. That's a confirmation. And then preferably you want your RSI to come below the 20 level. And it came right about to 24, which is still good because you want it to be at least below 30, preferably, but I like mines. When you find that it's below 20 for a buy, that's a really strong confirmation. So, sorry we didn't get into this trade, but it's okay. At least you are learning the setup and what to look for. So let me just highlight these areas for you so that you'll know what to look for. Okay. So notice here on your RSI, it hit the 24 level and then it's pointing up. Okay, everything is in sync with each other. And now let's just highlight our stochastic. We're gonna plot it here. Oops, sorry guys, let me grab it again. Do you guys have any questions? Type in the chat if you have any questions that you want me to answer based on what we're going over right now. Okay, so that's your stochastic, see? So see how your blue signal line comes down below 20, it crosses up and it crosses over the red signal line. I have a video on stochastic on YouTube if you want to know more about the details of that and how it works. What I encourage you to do is know how these indicators work in your favor, not just getting in because the indicator line tells you to. Of course, we're looking at overbought and oversold sections, but knowing exactly what that means and how these indicators work. So that was something that I wanted to know when I first started. So I go over that in the videos. But so let's see if we had gotten into the trade once we had a strong confirmation. Let's measure. So usually you want to get in on your second confirmation candle. So you can get in on your first confirmation candle when everything is pointed up, but a stronger confirmation is when you see the second blue candle start to form, because that's a stronger confirmation that price is continuing to go your way. Sometimes you can have a fake out, like right here. There was a confirmation right here. You notice you have 4 strong red candles. So this is where you want to make sure that a hard trend is not up against you. It's still a good confirmation, but like I said, you can't be afraid of pullback, right? And that's why you want to draw your support and resistance levels, because it'll make more sense. Market pulled back, didn't drop below our support level, then continue to go long. So it's going to pull back sometimes, but as long as you have a strong confirmation, that's usually a good indication that price is going to go your way. But if you wait, because notice here, even though we had a confirmation here, price closed outside of the band, if you look straight down during that time, your stochastic hadn't yet crossed. But notice when your stochastic crossed, pointed up, your RSI came to the 24 level, pointed up, you had your confirmation candle, your blue candle here, everything started to go your direction. So had we gotten in on the second confirmation candle, which is about right here, we would have had 12, 11 pips. Okay, so you could have gained 11 pips. And what I have actually back tested is that usually with this strategy, you can get at least a good guaranteed 10 pips. I wouldn't say guarantee because we can't guarantee anything in the market, but on average, you can definitely get a solid 10 pips, okay? And yeah, you could totally back test this. And what I mean by that is going back into the history of this pair and just look at your criteria for your confirmation for your strategy. And you can look at the times of days that it was traded. You don't want to look at the consolidation areas, but of course, where you have confirmations, you'll start to see patterns. And that's what I mean by finding those tops and bottoms. Look at here, see? So when I say top and bottom, here's a bottom for me. Let me point this out. Come on, and grab it again. So here's a bottom. That's a bottom. And what I mean by that is it's below the 20 level, okay? So 20 level, above 80. So I look for anything above 80, below 20. And this is why I have such strong confidence when I enter the trade, because every time I've seen a strong setup like this, it pretty much went my way for at least a good, like I told you, 10 pips easily. Okay, unless the market had a strong trend, then that's the only time you really want to beware. But let's go ahead and scroll back over. So we've gone through some pretty good information. Hopefully this is really helpful for you guys. And I do want to get you in a few trades, but more importantly, I want you to understand what you're doing. So look how nice this played out, okay? So that's exactly what you want with this strategy, and this is the type of setup that you're looking for. So let me go through another few pairs, and I'm going to see if I can find a trade for you to get into. I'm going to give you a take profit and a stop loss. At this point, I personally wouldn't get into GBP USD only because the movement has pretty much been made. If I'm not in early, I don't like to get in the middle of the band. I like to be closer to the bottom or closer to the top, if that makes sense. Yes, patience is so important. And if you have patience, you'll have better outcomes. But it's a great strategy and it's very simple and I love it. And I feel that it's a great, strategy to help you. I tell all my new customers and especially even those who are existing, don't focus on making money. Don't focus on getting rich overnight. Focus on learning to trade well. And that's when you'll start to see the difference in your trading. And you might stick with this strategy and you might not, but guys, you can make your monthly subscription using the web analyzer and a strategy like this so easily. You only need to make a minimum of $10 to $12 a day to cover your subscription. And how nice is that if you're able to do that between swipe trades and the web analyzer? And as you get better, then you can start to revise your goals a bit. But that's just a tip for you guys. So I'm going to go ahead and scroll through a few more different pairs and let's go ahead and see if we can find a setup. So this is USD JPY. Let's see, this has a similar setup to GBP USD, which it moves the same. So let me just take a look here. So as you notice, it's having a little bit of pullback now. So this is a 4-hour time frame. So this is not a bad trade. I just like to get in earlier. So let me scroll through a few more and let's see what some of these trades are doing. And we'll see if we can find a good setup before I let you guys go. So see, sometimes I just scroll through, but if you trade one currency pair, then you can just stick with that one pair and you can ride it up and down. And then if I don't find any setups at the moment, I kind of just take a chill pill and I go do whatever I need to do until I hear a cha-ching from the IML web analyzer. So I'm actually going to end this recording, not for you guys to jump off, but just for the playback of this. I don't want to drag it on, but we have another live session for New York on Wednesday, and I'll focus more on just trades for that one because we've gone over setup. Everyone can watch the playback on this one. So when we come on Wednesday, we're ready to roll and we're just jumping in trades, okay? Wednesday, I'm just gonna show you guys, we're just gonna find proper setups and that's it. I'm not gonna go over risk management. We'll cover our risk before we get into the trade, but other than that, we're just gonna find setups. So if you guys have questions, go ahead and comment on the playback of this video. I hope that you find this helpful. Make sure you subscribe so that you can stay up to date, and we will see you in the next training.